Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 140 for September 22nd, 2020. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today we will be discussing your trade ideas. So today I've arranged for ProTrader Mike of MojoDayTrading.com to join us, and you are seeing his screen and his charts right now. And the option professor is back to moderate, so I'm going to go ahead and turn it over to him.
Sure. And today I think we've got a very special guest because he is handling a certain area of the markets of small cap, and there'll be a lot of stocks I'm sure that I'm not familiar with, and he'll be bringing them to the forefront. And he specializes in this, so obviously it's nice to have a dedicated person looking at this one type of aspect. Before we get started, ProTrader Mike, just give a little background on yourself so people can get acquainted, and also a little bit about your website, which we'll get into later in the broadcast.
Very much appreciated. Thanks for having me on the program. Looking to share some of my knowledge and golden nuggets of information. I specialize on the swing trading and I'm a pure day trader, have been for 30 years, but I also run a swing trade newsletter. I love looking at charts and graphs. I specialize in the small cap realm, stocks anywhere from 50 cents to pretty much $5, around 2-3 is my sweet spot. And I use the Ken Slim system by William J. O'Neill. It's an amazing fundamental system that identifies characteristics and repeatable patterns of companies that have worked over time. And if you can identify a 7-ingredient characteristic of a company, your odds on making money on it have greatly increased due to historical patterns and the way the system works. I'm looking forward to sharing it with you.
Absolutely. Could you just briefly go into Ken Slim? Because I know I've heard it before because it's been around forever, but I don't know that everybody is real familiar with it.
Absolutely. 30 years ago, I started to get these books from Wall Street called the Daily Graphs, specialized on the NASDAQ. It was a green book that got delivered every weekend to my house. And it seemed like all the money managers, banks, mutual funds were getting the same subscription, this book. And it had hundreds and hundreds of charts in it. I would scroll through the charts, picking out my characteristics of this acronym called Ken Slim. What William O'Neill did, he's the editor of the Investor's Business Daily, if you don't know that. Also the author of How to Make Money in Stocks, the #1 book on Wall Street for the last 30 years. Many guys that have won the U.S. Investment Challenge are disciples of William O'Neill and this system. So when I started, I wanted to find who the biggest winners are and what they've done. I saw that, pretty much copied it, made it a little bit better into my own proprietary system on small cap stocks, not the bigger ones. And I've noticed they all work the same. The C on Ken Slim is current earnings per share. All these small cap companies are growing 100, 200, 300% quarter after quarter every 3 months. The higher the percentage, the better the company. The A is annual sales. So you have the C and the A part. The annual sales and revenues of the company also 100 to 200% increases quarter after quarter. And if analysts are increasing estimates during this year and next year, and they're going from 50 cents to $1, I know the next quarterly earnings report, there's going to be no surprise for me. I just got to stay in the stock as long as they're keeping up this increasing pattern of increasing earnings per share and sales for the company. The N is the new part of the formula. The company's hitting a new high in price. They have a new CEO. They have a new product. COVID hit, some new parabolic catalyst. Something new is making the stock go. The S is shares outstanding. Every one of the best winning companies of all time that ever went from 20 to 100 had a certain number of shares outstanding. My sweet spot in the small caps are usually under 30 million shares in the company's float that's available to trade. I found those pretty much when volume comes in, they move for a couple of days. It's my sweet spot. The L is a leader. The company has to have a high relative strength and be a leader in its group. The I is institutional sponsorship. The company has to be owned by mutual funds, banks, and institutions because retail doesn't move stocks. And M is market momentum. I like to pick stocks in top 30 industry groups because that's where the banks, mutual fund managers, and brokers and all the top hedges are all looking in that top sectors that are moving week to week, increasing in strength. And when you apply a small cap stock or a stock on the large cap side to these Ken Slim characteristics, the odds on hitting a huge winning company have greatly increased for you.
Yeah.
And that's what I do.
Because you got numbers behind it, and it's not just a rumor.
You got it all. So let's go.
All right.
Let's
Let's hit the list, and then I'm definitely interested. We'll swing over to you very shortly, but let's start, and I'll bounce around the list a little bit. We don't have to go in order. Let's start out with Tesla, TSLA, because it's in the news. Supposedly the battery thing is a little bit of a dud, and what's going on here now?
Okay, Tesla, as a matter of fact, is a great example of how you switch chart patterns. As an example, I'm going to start on the 30-minute and go short term. The stock made a move from about right here. Let me just go to my annotate. Hold on a sec. All right, draw, boom. Okay, so the stock made a move from right here. Hold on. All the way up to here. This is 400. And that's 450. The stock, if you would switch, it's a 30-minute chart. It's actually a little bit small. I'm looking for this signal, which came up here, to stay up, and watch how long you can stay in the stock for. So let's go to the 60-minute. Okay, here's a perfect example. So on a short-term trade, if you're trading Tesla, you want to come in right here and ride it all the way up into this box. See how it stayed above this 80% on the stochastics? Look at this move. This move right here is from 460 to 340, 120-point move right there by riding up the stochastics and staying above this line. It trade ended right here. So if you would have sold half when it broke that line and switched, because you own it so cheap, watch what happens when you switch to a longer term time frame. Let's go to the daily. So daily, same thing. On the daily chart, use the same exact characteristic and pattern. Let's go right here. And boom, right there is right here. This is $180 a share. This is 360. So you could see it went up and it stayed above this until it crossed right there. That's your sell. And if you switch to the time frames and use this indicator, which is called the stochastics, the top is 80, the low is 20. You want to look to buy when it's below 20. Carefully and scale in with a small stop. If it's wrong, you're going to reprice it lower until you find that bottom, like was over here. You bought here, it rode all the way up, you sold it right there, really nice move. Did the same thing right here, and it did the same thing right here. You bought here, she rode up beautiful over the 80%. You're in it this whole time. You could have sold a little bit there, but it went right back up and you were in it this whole time. And this move is from 300 to 500. That's a 200-point move. So now you still have some cheap down here, let's say. Switch to the weekly. Get out of the daily and switch to the weekly. Now look what happens. You could stay in it even longer. So here's the weekly. So now you come into a weekly chart and you in here. In here, rode up until right here. So this is your move. You were in here and you were out here. That's 500. This right here is 250. It's 100% move in the stock. And if eventually the trade has to end. The trade has to end eventually. We're not grandpas. We're not staying in it forever and ever and ever. We're looking to make money and ride it the best we can. Mm-hmm. You're out of it here. You're out of it here. You're in low and you're riding it across. That's what I do on all the stocks. So any stock we pick, I'm going through the 5-minute on the short term, into the 30, into the daily, into the weekly.
Gotcha. All right. How do we like gold? GLD obviously has been rolling over to the downside. Is look like there's a lot more to go, or what are you thinking there? GLD.
I look at the gold stocks like JNUG and Nugget.
Okay, sure.
So I'm looking at JNUG right here. Let's go into the daily. So gold's a hedge, a bank and hedge and a billion-dollar man's dream. It's just a trading machine right here. Well, let me get out of this. Let's go right into gold, draw. So right here, it's just a box of goodness. They're buying low range, selling high range, buying low, selling high, buying low, selling high, buying low. Someday it's going to break the pattern. Who knows when it's going to break the pattern? But until it does, they're range trading this stock, and there's nowhere to go on it except collecting premium. Buy some shares and collect some premium. You're going to be in it the whole time unless you're trading it.
Now, for people who don't know what you're talking about, collecting premium involves some covered call writing?
Covered call writing, correct. So you'd buy some right here at 150, or if you already own it and you're just sitting on it, sell some options while it's doing this up and down and making you, oh, I'm up today, I'm down tomorrow, I'm up today, I'm down tomorrow kind of thing.
And when you're choosing your strike price, in the money, at the money, out of the money, what goes through your mind?
I'm looking pretty much a month out on my covered calls because I want to collect as much premium as possible. In this market, that seems to be a long, pretty much time when you're in the trenches every day to watch 20 days go by. And I usually collecting around 8 to 10% premium in the covered calls during that month.
And the strike is generally at the money, a little bit out of the money, or what do you think?
A little bit above the cost of the shares of the stock.
Okay, so whatever you bought at, a little higher than that.
So I can make a little profit on the stock if it works and collect the premium. I'm willing to forego the extra it'll go in that month that I'm in it.
All right, let's take a look at Netflix, NFLX.
NFLX. Netflix. Here's a longer term picture on it.
You got a lot of subscribers.
Yeah. Let's see what we have here. So Netflix is a tank. Okay. This thing got a big old base right here, big old base right here, big old base right here, big old wheel here, big old, it's like a tank. You know what I'm saying? It's like a tank. So your risk is this right underneath. So if you get a red bar, you're out. You're not marrying this thing down to here. No way. You're just playing a little bit of risk, but your reward is all that. Go test the top of that and the top of that. You got 560, possibly into 600 on Netflix. And if it's anything like what's happening, Roku is ripping right now.
Yeah, so, you want to put Roku up? Because that was listed here too, Roku.
So Roku's ripping right now.
Streamer.
So Roku, same thing. So this is a mimic of Netflix. It already did it. So just look, just repicture the Netflix that we just did right there. Let me go back to my pen. So Netflix, like I said, here's the tank. We just did it.
Yeah.
Okay.
And it busted to the upside.
Here's your tank. We just drew that on Netflix right there.
Right.
Okay? I said if it busts down, you'll reprice. We're not going to marry it down to here. No way. You reprice. Wait for that and see if you get a bounce off that bottom right there. But look at the upside. Boom. And look what it did. It did exactly that. So a Netflix, I think, does exactly what Roku does right here.
Do you know the symbol for Carvana? Because it was up 35% today. And I'd love to see if your analysis would have got you into that.
Carvana. Let's take a look at that.
Up 35%.
You know the symbol?
No, I was wondering if you knew. Carvana, C-A-R-V-A-N-A. Let's see if I can.
I know there was Trivana. Yeah, I'll give it to you. C-A-R-V-A-N-A. Is CAR, that's Carver Bank.
Yeah, CVNA.
CVNA.
Yeah, CVNA, right.
CVNA. CVNA.
This is a nice back test.
Okay, so Carvana.
That's just a big gap, huh?
Yeah, he did a V-band break. I'll show you. So let's say I'm gonna go to my pen. So Carvana's play, everything is to focus on right here. It went from 170 to 220. She dipped and she stopped right here, which is about 177 stop. It's one of the things I teach in my course, where the things stop.
Mm-hmm.
I'm always like, oh my God, it ran up here. I got to buy it right there. I lost. Oh, I lost. I never have patience. So every time I lose, I'm like, where did I lose at? I always lose right there. I'm like, okay, I'll hold it a little bit longer. I'll hold it a little bit longer. Damn, I got sucked out, and it goes right back in my face.
Yeah.
Every time, you know?
You know, with this pullback we're seeing in the markets, you showing the people where to look for things to stop is going to be very important, because there's a lot of people who think the next 4 weeks to 6 weeks, this is where this thing is going to stop, and having some mechanism to figure out where that point is would be helpful.
Very. So look, so right here, you have like a tank here. It stopped here. So your risk is right here.
Yep.
Looking for upside to come back up. So what happened is it went down. You stopped out. You repriced. Wait, which is probably off this. It didn't stop. It stopped actually here, which is no big deal. So you rode it on the way back up through here or through here because it confirmed. And either if you bought it, you got lucky. Mm-hmm. This is, I call luck right in here. Whatever made it do that is lucky, because I would not have touched that stock at all. Let me just clear this.
It was an announcement probably.
Yeah, I would not have touched that stock at all because of this. See all that? Mm-hmm. If I would have bought it here, that would have happened to me. So there's no way. I don't even like that stock. I wouldn't have even touched that. It has too much negativity to do this again recently right here. I wouldn't have bought that stock.
How about Facebook? That's on the list, and some people are thinking 245 would be a worst case scenario, and it seems to be in that neighborhood. Are we getting anything on Facebook?
Let's take out the big boys. Facebook. So we come here, FB. Facebook, yeah, made a nice little bounce here off 244. Yeah. So it's going back through 250. It'll stay just like the gold. It's exactly like that. It's a big boys trader's dream. So right here you come, same thing I just did before. Let me go into draw. So you have a trader's dream. So there's your bottom. Bounced right off of this. Yep. Here's your new level.
Yep. As long as it's above there, it's a good deal.
As long as it's above here, it's a tank. So right here, if it should dip below here, you'll just reprice it maybe right here, right? Or wait. This is what a pro golfer is. You watch. This is what a pro trader is. Patience. This is what makes you win. Patience on the downside. Waiting. At least 3 red bars. Watch. 1, 2, 3. I'll take a shot here, X, and if I'm wrong, hopefully it'll go back. I'll reprice, okay? And it didn't really drop. It went back up a little bit. I was wrong here. I could have repriced, or here I'm wrong. It didn't stop. So now I try again here. So is it going to stop like we see right here? So this is your stop. You have very little risk, this little bubble. But here's your upside, all the way to the top of 280. If it busts 280, you're going right through 300. There's nothing from 280 to 300. It'll be up 20 points in one day. As soon as it touches 300, if it touches 311, it's going to go to 330. And then it's above this, which it's gone. You just have to use this as your trailing stop and keep on raising it. So the reward is huge. this huge circle. The risk is this tiny circle. Facebook's looking really good.
Another one on the list that's
and look at this.
Yeah.
You might be trailing up. If it goes to, if right here, if it's in the middle at 290 right here, if it goes to 300, it's going through 80 right there.
Yeah.
At 311, it's up here above 80. You can ride this thing, and this thing could keep on going, just like it did from here all the way up to here, which was bottom all this whole run. And that's how you do it, man.
Yeah.
There's some good stuff in Facebook. I like it.
This Boeing also came down to what they thought was a buy zone, BA, and that's on the list here.
Let's check her out. Airline's been beaten up. Again, you got the traders. You got the dream. It's not going anywhere. It's a covered call premium collector's dream. This is parabolic. This is a flash in the pan. Let me get off this. You can't see that. Let me get this. This right here is a flash in the pan. Nothing even happened over here. It dropped in March down here in COVID. So you have this huge range from here to here, and now it's just in the middle. So they're playing with it like gold.
Right.
Up, down, 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 up. Collect some premium. It ain't going anywhere.
Right.
It's a buy right here at 190 to go through 200. Let me know when it gets to 199. I'm all in. It'll go right through 200. Until then, I'm not interested. Let it come down here to 120, back down to this bot. I'm not anywhere in here. I'm not really interested.
Yeah. A breakout. You played a breakout.
Yep.
Yeah.
Otherwise, collect premium. There's nothing going on.
Yeah. Currently, you're collecting premium, but above 199, you're playing a breakout.
Yeah. And in this market where things are shaky and or kind of trending balanced to negative, collecting premium is golden. It's great.
100%. With regards to Square, another money processor, a little bit, a little specialty division, had a great run off of the March lows, but are we tired up here or what?
Look how amazing this stock is. This is, you've already made, you needed to be in it like this. Let's find another one that does this, okay? It came down, you started scaling in here. She wrote, I even added right here, and it went above STO right there. Look how long this stayed in. 150, and this is $30 a share. I think it made its, you could have bought it here and added here and now be in it looking to sell part up here and up here, holding stuff to see if it breaks through the top. But you already had to be in this trade right down here. Otherwise, you're FOMO, you're chasing.
You're showing a good example of how something can get into an overbought condition and remain there for a while.
Yes, or an oversold condition and remain under this line for a while. And then when it breaks out, then you got your buy, and I call it a chairlift, like you're on a ski slope. I call it my rail grind. It's called my patented rail grind. Check it out. What I do is I enter the chairlift right here. So here's the house. I'm in line, and I get on the chairlift right here. And I'm in line with everyone. It's just taking me up, taking me up, taking me up, taking me up, taking me up. As soon as I get over 80%, I'm skiing. I'm off the lift. I'm skiing. I go down. I build up speed. Woo, look at this jump. I did a backside 360 off that jump. Coming down, picking up speed. Up. I may have to sell some. Sold some. Up. It's going back up. I'm nice. I'm in here. I'm super long. That's a great trick right there. Picking up speed. I'm out right there. That's it. And I would have sold on that weekly red bar. Maybe look, didn't go down enough. It would have to go down here for me to re-like it. But if I'm selling calls in here, I still own this thing during the whole time. So these are great stocks, to have them during the week or the 2 week. Let them get called away. You don't make an extra 2 points, but you're covering whatever you missed on the premium. And then you just redo it again. You just rebuy it back and redo it again.
They're trustworthy. They get into a trend and they remain in a trend.
And they remain in a trend. You just have to switch from the daily to the weekly chart and get off the daily, because once it goes up on the daily through this STO and stays there for like a week, then switch over, because you don't want to be out when it goes down here, because on the weekly it's still above.
Now, this next one is in a out of favor sector, but you know, sometimes these sectors can change. Energy. Let's look at Exxon Mobil. They just cut their dividend, and so let's see what's going on there.
I love it. This is the chart patterns that are going to be in play and in favor for the next year. These are beautiful. I love this more than anything right here. Great company. So you want to buy right here. See that? As soon as you want to buy an entry, cost average in number one right here at 35.64. If it goes lower, beautiful. Tap it again. Then wait for your first green bar like that one. See how it went red, red, red? That's your 1 and 2. As soon as it goes green right here, that's your 3. So you'll be in whether you want to buy 100 shares, you go 10 shares, 10 shares, 80 shares. You go 100 shares, 100 shares, 800 shares. Your biggest buy is on the green. So now you got a really good cost basis. And then you just ride that baby up. It's going to go higher. So your stop is like right here underneath, and just reprice it on another red bar down here. The commissions are free nowadays. No harm, no foul with that. But if you're right, let that baby go up. Test the top of this, sell a covered call at 39 and 40, and there's your box. Let it stay there for a quiet period of time until it breaks this or nothing. You're in at the bottom. There's no risk in this stock right here. This is one of the best ones we've looked at right now. So
now, a lot of people are thinking this Apple has gotten down into a buy zone when it hit 103. Is your information confirming that?
So here's this, and here's this.
Now that they've gone 4-1, everyone can afford a half a share or something. Huh?
Yeah, that baby right there is going. So let's go look at Apple. I traded Apple right here yesterday. Let me get this clear. Apple. This was my Apple trade yesterday. Right here. Can you see that on my screen?
I think so.
105.90.
Let's see. Oh yeah, 105.90, right? Right.
I'm in 9:45 a.m. yesterday on 9:21. I'm like, dude, this thing's going to reverse. And I liked it. It bounced off the 103 at 105.90. Like I told you, at 90, I'm all in, dude. It's going through 106, okay? So right here, it goes 106.42. Then it goes 106.59. Then it goes, it's heading up into the rail grind, 106.79. It's getting higher towards that 80%, okay? Now I switch. This is 106. I switch to the 15-minute right here. So Apple on the 15-minute, here's my trade. And pen, boom, boom, boom. So I bought it here. It rode up. I stayed in it the whole time here. Look at this, 106 to 111. Green without even moving. You see that 111? It went right through 111. It went right to 112.06 for me. So I'm still in rail grind. It's not, otherwise I would have sold it. I would have sold it at 110. We sell too early. How do I stop doing that? Look, rail grind. Above 80%. It's still going. I loved it. Great trade right there. So I loved it off that 102. I traded it for 9 points up to 112. It's a trader's dream right now. And that was yesterday. And I do that every day in the Mojo Day Trading chat room. I have a chat room with hundreds and hundreds of traders that come in. I call out the picks, mostly to trade through those even numbers. They're really easy to do each day.
So you'll show this information to subscribers and people who go to your chat room, huh?
Yeah, they see the same platform. It's called the DOS Trader platform. I trade through Interactive Brokers. It's a third-party application that you can get and trade through that brokerage firm. And I share my screen and I call out the trades. They get to see me trade live. They get to see the buys go in, my orders and my sells, and I'm telling them why I'm doing, and here it's bouncing, and here it's going through, and it's going up on the chairlift. Let's get ready to ski. We're all in rail grind now. Let's switch to the 15-minute. Oh, it's still going. Let's switch to the 30-minute, and we're all doing it together. It's amazing.
Perfect.
Yep.
Let's look at two semiconductors. The first one's Nvidia.
Yep. AMD's had quite the run and didn't follow Nvidia.
Yeah, we're going to get after that one after this one, or vice versa, whatever you want to do.
Yep. Usually one follows the other in a tag along. So Nvidia actually, let's do an AMD comparison. AMD, see if they're exactly the same. Yeah, they're pretty much the same. Yeah, they did go together. So if you see right here, it stayed up pretty good. This one stayed up pretty good. It went right here was your buy. Went up on the chairlift and stayed up there until pretty much this parabolic drop, which was right here at the top. So you nailed this one, came back in again, you rode it up again. Now you're in here again on the buy about halfway. So I wouldn't touch it. It's going to continue to either go up or it's going to come back down under 20%. You want to get it right here and right here. See that gap right there? There's your base of your wheel. So you got a tank along here, 3-wheel tank. Your risk is nothing. This little mark, your upside, I would see if I'd let it come down first. And then your upside is back to where it is now to that. That's Nvidia. Otherwise, Nvidia is a tank right here. It's going to either set a new record high or it's the biggest piece of crap in the world.
How about AMD? Same story?
It's the same exact chart.
Yeah.
I could just erase the drawing, switch to AMD, and you got the same thing.
You know, there's a
So
stock
AMD was your move down here.
Yep.
It ran all the way up. I switched from the daily to the weekly. This will be all long right here without moving. And that was really the play in it. Otherwise, it's already made its play. It already made its play. Here's the weekly on it. Look at this move it made. It made from down here, which was low of 49, went through the 50 even number, and it didn't end until right here, 87. You don't have to look at it. There you go. There's your sell triggered actually right here, which was 82.35. It went to 94.
Right.
It took you out at 82. So you didn't hit the top. You didn't hit the bottom. But look how much you made in between by staying in it. You know, you buy it here at 50, at 60. What are you going to sell at 70, 80? Did you even know it was going to go to 95? No. But this kind of stochastic indicator and switching from the daily to the weekly will keep you in stocks for a much longer period of time. Apple did it tremendously when it made this run. Look at what Apple did. It went from 57 to right here to 99 to 128. So there's one sell when it broke for the first time, and there's another sell when it broke for the second time. So you rode it from 50 to 130, 80 points. That's not many reds in that weekly chart, man.
No.
You don't got to do you don't got to be jumping to sell anytime so quickly in that weekly run from any of those bars. There's no real reason. There's real reason to, instead of selling, to sell some covered calls like on that red one or this red one or this red one.
How did Zoom trade for you on this system?
But here's a tank right here. This will come right down to here and stop.
Yeah.
Zoom.
Yeah, Zoom's on the list. ZM,
Let's check her out.
because that's had a wild ride from the high to the low back to the new high.
Kind of like Roku.
Mm-hmm. On steroids.
And Peloton. It's kind of like, these stocks that are like, it went from the medicine, Moderna. I had all those from 30. They went to 90. I had Codex at 3. It went to 21. It switched from that to like funeral services to energy drinks that had supplements in them. It switched from industry to industry to industry and kept on to the pool. The stock POOL. Look at this stock. Okay, in March right here, I saw everyone's going to get pools. It went from 168. It stayed above until rail grind till right here. 342. Look at that. Look at that. Pool company. It's the only pool company traded in the world on the exchange.
Yeah, I never heard of one.
There is no other one. This is it. Pool. It's symbols. Pool. It's the only one. I wanted a small cap pool company. This was it at 160. I picked it and put it out. So all these other ones, they're all done. The one that you just mentioned, they're completely over.
Right. Right.
The one I like is like the Boeing that's downbeat, and that has a big room to go on the upside.
And Facebook didn't look bad either.
GameStop. Look at this GameStop right here. GME.
Yeah, they changed some news on that. What happened there?
See, this thing went right here. Look at the buy right here.
Yeah.
So you come in right here. Okay, buying this. Look at this chair lift up, chair, 80%. You sold a little bit of it right here, which is on that bar, but you're still in some, and now it's going back above. No reason to sell. Still going. GameStop, GME. It's, it's similar to 2 stocks I picked. One in April called NVAX. I'm like, dude, how, when does this thing stop? Look at this stock. NVAX. Let's go clear. Look at this. NVAX. I got it at 485. It's 110. So I picked NVAX here. Go to the weekly. At $4.85 in March, right here. It was actually a little earlier, right here. 485. The stock ran. My doggies love it. You like that, right? Shay, shushies. Good one. They love that one. So it broke right here at 180. Look at this run. It went from here to here. This is from $40 a share to $180 a share.
Now we're coming up to about 20 minutes left here. Don't want to waste, I don't want to not have enough time for you to go over stocks that you find on your focus list and a little bit more analysis on how you come up with them.
Yeah.
So let's turn over to your scorecard.
Well, you want to see a couple that I like? Okay.
Yeah.
I have Blink charging stations, which I've had for a while. Did really well today. Let's check this out. I have a little portfolio right here. Model on Stockhoot. I'm up 84% year to date. I got 59,000 cash available. I got some Tilray. I bought today at 12 o'clock, up 3%. Love the weeds. I think they're amazing down here with some covered calls, collecting beautiful premiums, which I've been doing. I'm up 5% on the ACB. Defensive with SQQQ, LABD, SPXU, and UVXY. I think the market is going to, you're looking at these stocks. Here's the daily on this stock right here. So I think, again, just look, tremendous upside. Not a lot of risk on the downside here. It's in a base. Where's it going to go? Only way is upside for me right here. And if you look back in time, look at the run it did last time the market corrected. You know what I'm saying?
Mm-hmm.
So there's a lot of upside in a stock like that. And a stock like SPXU, that's the same one right there. Here is SQQQ, same one right there. It's just filling in with the same LABD, same one right there. Stock used to be 500. It's 57. A lot of upside in that. Dust, a lot of upside in dust, which is the opposite of the gold, should the gold correct and so forth.
Oh, dust is a contrary to gold going up?
Yeah, look how much it went up here. It went from 115 to 445 in days.
Right.
So this thing has a huge potential down here.
So if one thought that the gold was going to go from 1900 to 2000 and then down towards 1700 in the next month or two, this might be something to look at, huh?
The stock at 18, look, where's it going to go? You're safe in here underneath the mouse. Look at your upside, 24, 25, 28, 29, 30, with some pretty big green bars that it can make because it made them before in its past. Look at this green bar. Went from 203 to 356 in one day. So can it move like that now? Absolutely. It's done it before. And those are lovely ETF kind of picks that I'm in. And on the small cap side, I'm not really crazy about a lot of great stocks right now. I have just a couple of them. I have this model on my portfolio right here. So I have my covered calls with my weeds. Been holding them for a long time.
Mm-hmm.
I have the Kronos Group from November of last year at $6. I've collected $4.50 in premium. I own it at $2. It's at $5. I'm going to collect another 40 cents on the 25th on Friday. I have Canopy Growth at 13. I've collected $8 in premium already since March 5th. I have a September option I did for $1. So now I'll be up $9 on a $13 stock. Aurora Cannabis, I have it $7. I've collected $6.60 in premium and another $1 coming on Friday for $7.60 in premiums. That's underneath cost basis. So I have a negative cost basis on Aurora Cannabis since May. And I'm doing it now.
I understand what you're saying, but some people might not get it. You're buying a stock, selling calls against it, and the cash flow coming in off the calls at some point has reduced your cost on the stock to zero or less?
Correct.
That's a very obviously that's a very fantastic result.
Yeah, and you just keep on doing it over time. And if during the month, if the stock actually happens to work and I don't collect the premium, I'll buy back the premium and roll up the strike price so I can still continue to hold the stock because I've collected so much premium in the past.
Right.
So that's good. I have, these are my long positions. I have Grayscale Bitcoin. Let me get my dogs to stop barking here for a second.
Sure. Well, that's very interesting, using covered call consistently. If you get into the right circumstance, the cash flow coming in, reducing that cost basis of your purchase down to a much lower level, or in some cases down to zero or less. That's a fantastic situation if in fact you can find the right stocks. And in your case, you have found a few that did fit that bill, huh?
Yeah. If you even take it one step further, first thing you do is sell a put on the particular stock, then buy the stock long, then sell the covered call, because if it shall work and or stay the same, you collect the premium on the put as well. And if it goes lower, you wouldn't mind owning that stock considerably lower due to it being put to you with the put.
Right.
So I do that also. And these are some of my small cap stocks. Bitcoin I've owned since April at $7.95. I'm never going to sell it. I think Bitcoin goes to 100,000. Stock's going to go to $50 a share. Don't want to ever sell it. This one's up right here, 15%, down 1, down. If it goes down 5% to even 20%, it's a normal fluctuation in these kind of stocks because they can go up 30, 50, 100% in a day. So if nothing has changed fundamentally with the Ken Slim system, I'll just add on a dip if it's not more than 20%. And usually these things have been holding up. You'll see the ones that are red and are down aren't more than 20%. And when they move, like this iFresh, I could be tomorrow, it could be at $1.50. So I'm not going to sell it because I'm down 10 cents. Nothing's changed since August 24th when I saw it on the charts. This one's up 5, this one's down, Super League Gaming. They do betting for online gaming. Huge growth. Ocean Power Technologies. They have buoys in the ocean that are collecting energy and power, putting it on, different kinds of fuel cell technology, clean energy fuels, these 3 specialty chemical, these specialty energy kind of companies. So forget Exxon Mobil. This is the kind of companies Exxon Mobil is going to be buying out and so forth. So fuel cell gets bought by, a bigger company and it's no longer there and you got $6 a share or something like that. I've seen that lots of times. Sunworks get acquired by First Solar or another big solar company because they do the solar power, up 18%. That was red last week. It's up 18% this week. So I don't sell them if they're down 18% or 6% because my size a couple of days ago was $1.10. Now it's that they fluctuate up and down. EVGN up 57, RIAM up 27. Here's what I've taken profits on this month. IMMR 14 and a 28. Moderna, I have Moderna at $4.55. I sold it at $62. I did covered calls on Moderna the whole time, $5.50. Big ones. 49%.
I saw Teva. Teva looks pretty good, doesn't it?
Teva, I collected. These are the covered calls I collected: 3%, 5%, 11%, 4%, and 7%. I collected last month. I collected Crone 35 cents, CGC $1.35, Aurora $1.10. Bright Horizons, I sold from 79 to 110. It got called away at an $8 strike price. Apache, I owned at $4.50. I had a $14 call, got called away. That's a 10-point winner, made 7% on the option. That's a huge win right there. Moderna and Teva, I collected 5 and then 65 cents. The month before in July, same thing. Crone 40, ACB at $1.30. BFAM, I collected $13 before it got called away. A U.S. oil fund, I got it at $4.90. It got called away at $25 for a 410% gain. I collected $3 that month for an extra 16%. Apache, $2 premium, 44% covered call that month. Vapotherm at 16, sold at 35, 111%, got called away, made $3. NanoString, bought at 24, got called away at 30, made $3. Moderna made $7. Norton Antilock, bought at 20, got called away at 20, made $1.50. So instead of losing on the stock, I made profit because I had the option. Ogen, bought at 54, sold 240%, $1.84. Boxel, $1.10 to 3. Qmute, 230 to 5. Verb, 110 to 255. OBLG, 295 to 455. So I'm all the same. Look, it's either gets sold at 05 right over the number or 55 after the even half. Look, 05, 05, 05, 05, 05, 55, 55, 55, 55. I try to do that. 05, 05, 55. Look at this month. 305, 55, 55, 55, 55, 55, 05, 05, selling at 05, selling at 05. So as soon as they go through the even number, way up there, like from 315, as soon as I buy it at 315, I put a sell in for 405 and 455. If it goes there, I'm out. And sometimes they spike and they go there and I get out. Went from 405 to 605. And there you go. Look, I bought Tesla at 329. I sold it at 363. It went to 470. a couple of days ago. I put it out in my newsletter. So if you were in my newsletter, we made a quick 10% on Tesla. I bought the bottom at 329. Sold it the next day, 363. Next day it was 450. Should have done that rail grind. But there you go. It's
but you got the good entry point. There's no doubt about that.
No doubt. No doubt.
So with regards to, people getting involved,
Here's my newsletter. Get my newsletter.
Walk people through. Walk people.
9/8. You would have gotten this in your inbox. Tesla going for the overnight. I think it gaps nicely in the morning. I got a 329 cost right there on the bottom. So I mean, this newsletter, if you join my chat room, I'll give you both services. Buy one, get one free for $149 a month. And I have a class coming up on October 5th for Mojo, my class that I teach, this boot camp. Check it out. And you guys could be in my class. I'll teach you in this 4-day boot camp. It's going to be the best class I ever taught. It's on October 5th. It's called The Perfect Trading System. And I will teach it to you. Right here, it's getting prepared. Let me show you, and then we're done. Getting prepared. I'll show you how to journal, how to track your trades, what the trade plays are, like through the STO, the Hines, and all these masterful trade plays, how to get mentally set up, how to make sure you have the right computer systems and the trade rules to employ the secrets of 1, 2, and 3, which are the only ways to trade like a true professional, using the systems, which are only 2 trade plays, number 1 and number 2. I'll teach them to you. You have to have an outcome goal. What's your outcome goal? You want to make 10 million? Well, what's the reverse engineering process goal to that? How many trades do you have to do at what price over what period of time? Do you have self-belief and patience with your system? You have to have the math, discipline, buying power, and scaling with the management, technology, support, and consistency. I'll teach you how to run your own business in the ProTrader Bootcamp in 4 days. You'll be a master. October 5th, 6th, 7th, and 8th. It's normally $14.97. I'm giving it as a financial non-event for everybody for $3.97. You have access to it whenever you want to rewatch the recordings, and whenever you want to, ask me a question, you got it. And there it is. That's all I got. 10%. A couple of people signed up. I got 30 spots available. October 5th. Love to see you in the class.
Absolutely. There's a lot to learn, and that's the way you're going to get it done. I thank you very much for being here. Again, you've got a lot you're bringing to the table here, and there's a lot of people out there trading who could use some help. So that's a good combination, right?
Absolutely. One stock we didn't discuss, which was crazy, which was Peloton. That stock, I can't believe it worked like that. Can you believe how Peloton worked over the last couple of months?
Oh, yeah.
Unbelievable, right?
Another subscription business.
Piece of junk company with nothing. Grew on subscription.
Hey, let's you want to hit a couple of ones that we didn't hit? Amazon and Microsoft off the bat?
Yeah, Amazon is all played and done with. I'd be very scared to touch that at the level it's at, thousands of dollars a share, and the average person can't really buy any of the shares of that company. It's a pretty much of a scam. You see on the commercials, you can buy fractional shares.
Yeah.
That's a way for the brokerage firms. The worst thing and nightmare I hear from the brokerages, don't buy less than 100 shares because it's an odd lot. It breaks up their order. It costs them more money to do that trade than a normal trade. So they don't like odd lots. So what they do is they've collected all these odd lots in a pool, and they said, hey, let's make a commercial and we'll offer people this 5 shares that someone did. We'll keep that in our inventory. And instead of sending it to the market where it's going to cost us all this money, let's give it to them as a fractional share. So it'll cost us nothing. And they're not going to make anything. What are they going to do with 5 shares of Amazon? But they could think they are. And that's what they're doing right now.
I didn't get that. That's very good. It's like a pizza shop that's stuck with a bunch of slices.
Exactly. It's a lot of pepperoni. They're stuck with a lot of pepperoni, man. You know what I'm saying?
Oh, God.
So, look, so every time you get a pizza, they're going to give you that pepperoni, man.
There's always something behind the curtain, right?
Always something. Always something. God. So, yeah. So they're too high. I wouldn't buy them, and you can't make any money from them. What's the next Amazon? Or what company is Amazon going to buy out that makes sense? what's the last 2 buyouts they did? Find something similar in the next industry. You got to be forward thinking and out of the box. And that's how you get lucky sometimes, by doing research and thinking like that.
How about Snowflake, SNOW? Is there anything going on there?
Yeah, that was a big move in the last couple of days. Doesn't Buffett have something to do with Snowflake?
Yeah, he was an early investor, like the smart people.
Yeah, smart. Snowflake, yeah, $235. How much you're going to make off of it?
Yeah.
It's up 2%. Cause you odge it all day long. A stock like that from 235 to 40, and it lies in between. You can't even look at it.
Yeah.
Very difficult.
You can go to lunch and be down 20%.
Yeah, Buffett's probably, if it's optionable, he would sell a 200 put for $30. And if it went under 200, he would own that. And then he would do a 150 put for twice as many. And if it went there, he would own the company.
Yeah.
He'd kick out the board of directors. He'd buy more shares in the open market, and he would take over the company. So that's what he does. So unless you're a big options player on these kind of stocks and bringing in premium, they're not for the average investor.
No. But they were on the list, so I play the music that I was handed. You know what I mean?
Yeah, absolutely. A stock that I'm in right now that I really think is going to go, and I have a nice position and I'm building. I bought it today on the dip. Is Express, EXPR, the women's clothing store. Look how deep. This thing was $2.40 on 6/8/256. It's 78 cents right now. Nothing's really changed in the last couple of months. They own a lot of stores, and the malls are closing down. So what I think, I'm putting forward thinking together. What's a good strategy if I was the CEO? Let's close all the stores. If you want a store, make it a boutique. Let's use the rent from every store nationwide, thousands of stores. Let's do online, crank up the advertising, do a commercial or two, and let's explode this. So next quarter online sales, according to what they are now, you'll get a 300% increase. It'll be blow away. The stock will go back to $2, $3, $4 a share, or even get bought out. They don't need brick and mortar stores. They already have the product. They have the name, the brand. They just need to cut the cost savings and use the money smart. And you got all those stores, Ace Hardware, any of these stores in the mall that have hundreds and hundreds of locations.
Right.
That's the play.
All right. This was a full hour. There's no doubt about it. And people definitely should check out the boot camp and check out the other stuff that you have there, the chat room and also the newsletter.
Nice, guys. Peace. Thanks for talking with me. I'll see you on the next show.
You bet. I'm going to turn this back over to David to sign out. And again, thanks a lot, Pete, for being here. It was a great time.
All right. Thanks, guys. Ton of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app or directory. And you can also go to TimingResearch.com to get access to any of the past shows, and as well as the recording of this show as soon as I can get it posted. And I just want to thank my guests again for today, ProTrader Mike of MojoDayTrading.com and the Option Professor of OptionProfessor.com. Thanks, everyone.